Good afternoon. Welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lavisha Darad. And now Nifty is set to clock its third straight weekly loss. Quite a volatile and a muted week we've had. We saw the Trump's tariff jitters, Fed's cautious stance on interest rates, and even the FIs continue to remain on the sell side. So all in all, we're set to end the week on a very negative note. If you look at Sensex and Nifty levels at this point of time, Sensex is down about 400 points and Nifty is also experiencing about 0.5% cut. But however, for this week, Nifty is down more than 0.5%, while Sensex is down about 1%, which is your 700 points downtick we have seen for Sensex too. And both the headline indices have been down for 12 sessions, 12 out of 13 sessions, they have been experiencing a negative downtick. Broader indices, however, they did show some resilience for this week. Today, of course, we are set to see that the Midcap and smallcap indices could snap its second day of winning streak. Midcaps is down about 1% at this point of time. Small caps also experiencing about 0.5% cut at this point of time. But to understand more about markets, joining me we have KRANTHI BATHINI, equity strategist at WealthMills Securities. KRANTHI, good afternoon. So good to have you. A very range-bound market, and experts that I've also spoken to that another week is also going to remain the same because FIs still remain on the sell side. What are you penciling in?
Hello, Isha. You're absolutely correct. Markets are in a range bound at this point of time. But the interesting thing today is in this range bound market, despite of the weakness in the market and also the negative sentiment around our Indian markets, Nifty could able to hold on to 22,750. That is the range Nifty could able to hold on right now. As long as Nifty could able to hold on to this crucial support zone, and it could able to cross 23,000 level, technically speaking, it is a psychologically important and a sentiment booster for the market. So as long as market could able to withstand these kind of levels, we can see some kind of positive momentum. We can see some kind of a revival can come back, buying interest can come back during this range. But these are the crucial levels we need to wait and watch. We can see some broad-based profit booking in the selective pockets also. Today, after the 2 days run up in mid and small cap space, but this correction has been deep the recent past when compared to the earlier 18 months, in the past 18 months, when we compare the dips, whatever the market had witnessed. In earlier dips, whenever there was a dip on Indian markets, whoever invested during the dip, they witnessed a fabulous gains. But this time is different. We can see some kind of global headwinds at this point of time in terms of the Trump tariffs that has been weighing more on the entire emerging market space. The rupee has been weakened to the maximum level at this point of time, and the unprecedented foreign portfolio investors selling, which has been getting continued at this point of time. So investors with a longer term horizon, definitely one can buy at these dips, but one thing is what they're buying is extremely crucial. The valuation froth is there in many of the companies. If the valuations are attractive, if the quality is the template, investors with a long-term horizon, more than 1 year, definitely can buy at these dips also. One can utilize this knee-jerk reaction and correction in the market to build their portfolio for a longer-term horizon is concerned. Lavisha, we have witnessed so many things in the past 18 months. Market witnessed the wars, steep interest rate hikes, and also the geopolitical issues. But this time is a complete FII sell-off. The global issues have been weighing on the markets, but uh, I believe is once the growth comes back to Indian markets, once the growth come back to uh, India, we can see the FIS coming back. The Q3 profits have been lukewarm. That's what the worrying area at this point of time. Once in the coming quarters, if there is a complete revival of earnings, if there is a earning momentum is gaining back, definitely FIS are come back to India.
Okay, okay. Earnings momentum gaining back. But Kranti, this quarter we clocked a single digit growth from the India Inc. What are you penciling in from the next fiscal year? The market optimism, the street optimism still remains on the higher side that, from FY26 everything is going to improve. But what are your expectations? What kind of growth can we witness from the next fiscal year onwards?
Uh, this is very crucial data market is uh, waiting at this point of time. Uh, the consumption revival, the measures taken by the government in terms of the budget to boost the spending, and also the capex. Everybody uh, uh, raising their eyebrows with respect to the capex budgets are concerned. But given the kind of the previous utilization of capex is concerned, whatever be the capex that came in the budget, it could be sufficient to boost the growth going ahead. Uh, uh, but we need to wait and watch. Historically, if you see the data, Q4 is going to be a strong quarter. Uh, so Q1 and Q4, we need to come to know the exact the strength of the economy and the corporate profits. That gives the way for the markets to go up further. But till the time, markets are expected to be in a range bound at this point of time.
Okay, all right. We just have the markets which is closing at this point. Sensex is down about 400 points below that 75, 350 levels. And even Nifty has closed with about 0.5% cut, which is half a percent cut. It has failed to hold that crucial support zone that we were eyeing out for 22. It has slipped below that 22,800 mark. And of course, we can see all of the sectoral indices have dipped in the negative territory except the Nifty Metal Index, which has outperformed the headline indices also. Nifty Metal Index gaining for the fifth straight session, up about 1% at this point of time. Otherwise, we can see Nifty Auto also succumbing to selling pressure. Yesterday, we did see a rebound in the Nifty Auto Index, but again, once again, the stock is down. The index is down, 2.5% cut coming in for the Nifty Auto Index too. Nifty FMCG, 0.5% cut. Nifty Pharma Index also 1%, 2% cut coming in for the Nifty Pharma Index. Nifty IT Index also about 0.8% cut. Mid caps and small caps that we saw a bit of a rebound for the 2 straight days. It has snapped the 2 days winning streak and it has ended lower in today's trading session. The mid caps experiencing a cut of about 1% and small caps experiencing a cut about 0.4%. But you were talking about, Kranti, about FII flows. We did have a Citi report that did come out in the morning, which says that dollar at this point of time remains significantly overvalued based on long-term fundamentals. So right now we are seeing some reversal from the dollar index. It's saying that it could peak out in the near term. So what does that mean for emerging markets like India? Because we have the Nifty valuation which is already below its 5-year average. What can we expect from the FI flow front?
The first and foremost thing where FIs are going to look forward is the corporate profits revival. Once uh, there is a strength in the corporate profit revival, definitely the long only FIs are going to come back to India. There are some kind of long only funds who have been waiting to invest in Indian market, just waiting for a correction to get the valuation comfort. That's what they're finding at this point of time. Once there is a clarity with respect to the earnings revival, definitely the long only funds which are dedicated markets like India, still we are one of the strong, uh, fastest growing economy in the world, and also the growth prospects on a longer term note, despite of these short term dips in the medium term, uh, can create a hurdle for them. But there are some funds have been waiting to enter into markets like India. Definitely, once the market stabilizes and the earnings level comes back, the PAs are going to come back. There are some, as we interact with many of the foreign portfolio investors across different geography and regions, they're quite interested on India's growth prospects on long term, but the medium term prospects have been because of the softening of the growth. They are in a wait and watch mode at this point of time. So once the growth revival kicks in, definitely the most probably from the second half of the year, we can see the FPI flows are going to come back. At least at this point of time, if the FPI selling comes to a pause, that can give some kind of a immediate respite to the market. But what we are witnessing is unprecedented sell-off by many of the funds.
That's right. What about mid-cap and small-cap space, Kranti? Because today we saw that it has again snapped its 2 day straight gains. How do you see the space? Can we expect some bottom which is coming out in the broader markets, or what do you expect?
Lavisha, last 2 years, investors in India especially, they're obsessed with mid and small cap stocks in their portfolio. Uh, that is the main reason whenever there is, and mid and small caps are perceived as the high beta stocks. So whenever these kind of major reactions comes into the market, the first and foremost segment that's going to get impacted is mid and small cap space. That's what we are witnessing at this point of time. So whenever we make any kind of investments in mid and small cap space, one need to be ready for these kind of volatility in their portfolios. But coming to your point, uh, due to the current correction in many of the individual stocks in mid and small cap space, there was a healthy softening of correction of around 20 to 30%. When the company have a strong earning visibility and the order book is quite strong, and main important theme to selecting a mid cap is the management quality, how they could able to, how these companies are going to handle the challenging situation, how the growth prospect, how they are taking the advantage of the current opportunities. If the same qualities are there, definitely investors can increase their holding in those mid caps. Of course, definitely there has been some kind of excesses and froth has built up in many of these mid and small cap space. We can't paint them with a single brush. So it can be very much stock specific and sector specific while selecting any mid cap stocks are concerned. So if investor is in a company, it can be a mid cap company, but it have a strong earning visibility. One can stay on invested, and in fact, they can use this downtrend to accumulate these companies at these valuations.
Okay, okay. Just one last question before we let you go, Kranti. Any sector that you're eyeing out for after this good amount of correction? Everyone is gung ho on banks and, of course, IT. But other than that, any space that you're eyeing out for?
Yeah, IT looks very attractive on a longer term basis. One hand, the rupee got depreciated, which is going to have an advantage for the IT earnings. But one of the overhang is the US prospects. Right now, there is a lot of emphasis with respect to the US growth is concerned. We need to wait and watch how these measures taken by the President Trump administration is going to pave the growth, or it's going to create one more problem for them because of these tariffs. There will be some kind of unintended consequences. That's what the US economy always faces. When the interest rates were in a reduction point, there were some kind of unintended consequences. And when the interest rates, when the Fed increased interest rates, all of a sudden we can see we witnessed the crisis like Silicon Valley banks kind of a thing going to burst. So the current Trump tariffs, what everybody were talking about, whether these tariff implications, how much benefit the country is going to extract, country is going to gain, and the corporate profits are going to go up. We need to wait and watch. We are at an early stage. But by and large, given the US economy prospects are concerned, that's what the market anticipation is. The IT budgets are going to go up because of the growth in the US economy in a medium to longer term basis. So investors with a long-term horizon, definitely they can start picking chips from IT space also in the medium to long term.
Okay, all right. With that, we have to let you go, Kranti. But thank you so much for your time. Hope that we connect with you soon.
Lavisha, always pleasure to share my views with you.
Thank you so much. All right. With that, we have come to an end of this edition of The Closing Bell. Do have a good weekend. Thank you for watching, and we will be back with markets on Monday.